Just giving your thoughts on the overall European VC market. We're seeing, I guess, continued de-equitization of the listed tech sector. Can you talk about the European VC market as a means to get exposure to innovative technology businesses?
I'm super positive about the future for Europe and venture capital, and I think there's a few factors that play into that. One is that we've seen Europe as an ecosystem for venture maturing. When we listed in 2016, we're about 20 billion of scale in terms of the market in Europe. That's probably around 80 billion now. So it's shown a natural progression. We had a peak period a few years ago where it went over 100 billion. And the reason that capital is available in Europe and coming into that ecosystem is because we have really strong underlying IP coming out of universities, but also entrepreneurs creating companies. And so there are certain sectors where Europe has been particularly strong globally, but it's always had, over the past 20, 30 years, strong IP coming through. What's perhaps been lacking is that scale of capital at all the stages of a company's life cycle. So from early stage through to growth where we play, and then to later stage growth and IPO. What's important is to have that consistency. And at the moment, there is a gap to capital that persists at the stage where we are in that Series B early growth stage. And I think, therefore, it's important that we see more capital being unlocked. And I'm positive to see that the discussions around pension reforms and such like are having an impact in terms of at least momentum and perception, but gives us a sense that the capital will start to come. What is true, though, is that we're still a third the size of the US, and so we're under scale. I'm talking about a story where we've matured and improved, and I see Europe institutionalizing in terms of its venture capital as an asset class, but there's a long way to go, and I do think it's important that governments continue to recognize the need to support that ecosystem, and unlocking pension capital is an important part of that. But it isn't just an altruistic unlocking pension capital for the sake of supporting our ecosystem. This is about returns, and venture has proven that it can generate strong returns higher than public markets, even after costs, and it's diversified in terms of the asset class relative to other asset classes and how it performs, and therefore it should be part of a diversified portfolio. And I think ultimately Molten can be seen as a portfolio approach where you buy shares in Molten because you're thinking about it in the round of an entire portfolio, and we're giving access to an asset class with daily liquidity. So for me, we'll have done our job well when we'll have generalist fund managers not necessarily needing to understand every underlying company, but just understanding that this is institutional and that they can buy a share in Molten to get access to the VC space.